Welcome to BigONE Weekly News Update. I'm Sophia. Last week, the market experienced the largest weekly gain since last November, with BTC rising approximately 8.1%, breaking through $95,000 midweek and closing around $93,750 on Sunday. ETH increased by 11%, closing around $1,790, and SOL rose 4.7%, ending at approximately $148. After Trump's reversal on removing the Federal Reserve chairman, the market is cautiously exploring the softening narrative. The three major U.S. stock indices rose for 4 consecutive days this week. But on Friday, after Trump mentioned U.S.-China tariffs, the S&P 500, NASDAQ, and Dow Jones briefly gave up gains, ending the week up 2.48%, 4.59%, and 6.73%, respectively. The Pan-European Stock Index hit a 3-week high, rising 2.77% for the week. U.S. Treasury yields fell over several days, with a weekly cumulative decline of about 8 basis points, ending at 4.24% on Friday. The dollar rebounded, and after the release of U.S. Michigan consumer confidence on Friday, it gave up most of its gains, yet posted its first weekly increase in over a month. Gold retreated, turning negative for the week, marking the first weekly decline since reciprocal tariffs were announced. In recent weeks, the cryptocurrency market has consistently outperformed U.S. stocks, with Bitcoin appreciating more relative to gold this week. This may indicate that Bitcoin's role as a store of value asset is maturing, attracting both institutional and retail investors who see Bitcoin as capable of withstanding the broad impact of macroeconomic factors on risk assets. Unlike multinational stocks, Bitcoin's value does not depend on supply chain disruptions or tariff negotiations. It possesses characteristics of global reach, liquidity, political neutrality, and resistance to capital controls, which are particularly important in times of fiscal dominance and geopolitical uncertainty. In terms of ETF fund inflows, last week marked the second highest net inflow week since the establishment of the BTC ETF. Net flow was $3.033 billion, with a trading volume of $19 billion. BlackRock's IBIT added 15,500 Bitcoins this week, increasing its total assets under management by 3%. The ETH ETF showed some recovery, with a total weekly net inflow of $205 million, accumulating an additional 88,400 ETH. Coinbase's premium and daily stablecoin minting trends are also accelerating. If the current inflows continue, we expect that Bitcoin and the broader altcoin cryptocurrency market may maintain an upward trend. Bitcoin is increasingly being included in the balance sheets of more companies. 21 Capital is the latest example of this trend. This new company is backed by subsidiaries of Tether, Bitfinex, SoftBank, and Cantor Fitzgerald, and is led by Strike founder and CEO Jack Mallers. The company plans to initially hold 42,000 Bitcoins, which is about 8% of the amount currently held by Strategy. Furthermore, companies like real estate financing firm Janover, whose shares were purchased by a former Kraken executive, and NASDAQ-listed supply chain management company Upexi are replicating this approach and applying it to SOL. In a recent speech, U.S. Treasury Secretary Bessent redirected the course of U.S. tariff policy, restoring market expectations to the state before 4.2. He pointed out that the root causes of the U.S. trade deficit lie in trade policies, fiscal deficits, and exchange rates. He emphasized that the problem for the U.S. is expenditure, not income, and stated that a strong dollar earns capital attraction and market confidence through sound policies, not just the level of exchange rates. This is essentially saying that 4.2 was a purely unintelligent action. An important driver of the U.S. stock market's recovery this week is the excellent financial performance of major companies like Google. As we move into May, the traditional sell-in-May period in the market, it is worth observing whether the cryptocurrency market can continue to decouple from the risk markets like the U.S. stock market. Join BigONE today and take advantage of the growing cryptocurrency market.